Welcome, ladies and gentlemen. This is Rick Rule for Real Vision, interviewing my old friend, literally and figuratively, Ross Beaty. Ross and I have known each other for the better part of 5 decades, meeting in the late part of the decade of the 70s in Vancouver, British Columbia. I'd like to thank Real Vision for sponsoring this ongoing interview series, and I'd like to just sort of refresh long-term viewers' minds and memories that this interview series came out of the Living Legends series that we did in conjunction with the Natural Resources Investment Conference. Ross, first of all, thank you for agreeing to participate in this series. I'm delighted to have you here, and I'm absolutely convinced that the lessons that you've learned in almost 5 decades as a natural resource entrepreneur will be useful to our investing audience. So welcome.
Thank you very much, Rick. You're making me feel nearly as old as I feel.
Well, the fact that we both got here says something at least about our tenacity. I want to begin by taking you back to being an adolescent and then a young adult. You may argue that you're still an adolescent, but we'll get past that. How is it that a young person in Vancouver, British Columbia, with all of the opportunities that were available to you in life, chose a career, first of all, in geology, and then in, I guess, what we should call extractive industry entrepreneurialism? What was the intellectual path and the career path? How did the decision-making take place that set you on the course that you so successfully navigated?
Well, for me, it was pretty simple, Rick. I just love nature. I love being outdoors, and I wanted a job that would take me outdoors. And I looked at being a forester or a fisherman or any of those kind of outdoor type jobs, and I settled on geology. I'd always enjoyed rocks and the earth. I had a rock collection when I was young, and I was just sort of drawn to it. So I took geology, and from my very first lecture, I knew it was a field that was going to be my life's vocation. I just loved every bit of it. And so when you're in geology, the natural thing to do in the summer in British Columbia is to work outdoors in the exploration industry, mineral exploration industry. And that's what I did for my very first summer. As a first-year geology student, I worked in the bush for 4 months, came back to school, did it again second year, came back, did it again third year, and so on. And it was a very easy thing in the early 70s to get a job working in the exploration business in North America. There were a lot of opportunities. And when I graduated as a geologist, I gravitated into that industry because it's what most people did. That was the best paying type job to have. It was an opportunity to travel. It was an opportunity to camp for me, fly around in helicopters, climb mountains. You know, it was sort of pinch me. I can't be getting paid to do this sort of stuff. I would have done it for free. I just loved it. And so that was my start.
Before you left the academy to go into the bush, you got a master's, first of all. You didn't go straight to the bush after those summer experiences, but you also got a law degree. That suggests to me that fairly early on, you decided that you weren't going to work as an explorationist within the bowels of a big company. Is that an accurate statement?
Not really. The law degree was something you have to understand the context. I'd done 3 years at University of British Columbia in geology. I took a year out to go climb mountains in South America, do a little bit of work in Southern Africa. I came back to Vancouver to do my 4th year to graduate as an undergrad. And then I went to London, England right away to do a master's degree in exploration geology, which I completed. And then I spent another year climbing mountains and basically hitchhiking through Asia with a backpack for a year. And I arrived back in Vancouver, having been away from it for 3 out of the previous 4 years. I arrived at the end of August, and I had 2 choices. I could either go to the bush and work in a remote field camp as a geologist, or I could continue my education. I happen to be a voracious learner. I love reading. I love studying. I love learning things. I love languages. I love music. I love all kinds of things. And I simply wasn't finished studying. So I had 3 choices at that point. I could either do a PhD, which was open to me in geology. That was interesting, but I felt too specialized. I could do a master's of business administration, an MBA, and learn more about business. But then I felt you can sort of learn about business by doing it. The school of experience, the school of hard knocks, is a pretty good school. Or I could do something that was completely foreign to me and completely foreign to most geologists, which is law. It's the science of human creation versus the science of natural creation. And so knowing virtually nothing about how a society is regulated and how it works and how it functions, I thought, well, for a sort of a hobby, I'll go and study law. And that's what I did. I actually hated it. It was awful. I found it was completely incompatible with my personality. But once I got into it, I didn't quit. And the other thing, there were a lot of fun people in law school, a lot of good parties. I wasn't ready to go to the bush immediately. I wanted to have more of an urban environment and hang out more with the woman who would become my wife. And so all these reasons led me to law school. Once I went in, I was doing it kind of part-time. I worked as a geologist during the winters, part-time with a consulting group. And then in the summertime, I worked full-time as a geologist. When I finished, I did have to article for a year. I had to become a qualified lawyer. But the very day I got, as we call it in Canada, I got called to the bar. I completed all of my training. I was eligible to practice as a lawyer. That very day, I took a flight to the Yukon and then a helicopter into the middle of nowhere. And that was day one of a company that I had actually incorporated in the last month of my articles, which was a company called Beaty Geological Limited. And that was my first day as a contract geologist, which is to basically work for myself in a company that I incorporated and see how well I could do as an entrepreneur. And that was day one, July 10th, 1980.
How important do you think your education was in the success that you became? And by extension, when you're investing in other people's companies, how much time do you spend on the educational part of their CV?
Very little, Rick. Actually, I sort of look at the people. It's a very important part of the investment equation. But there's many other even more important parts. People are pretty important, but the quality of the project is even more important. So, even an idiot can discover a mine if he acquires the right property. So that's not the only thing I look at. It's obviously something, but I know a lot of really, really, really competent professionals who have never found a mine and would not present well as an investment proposition.
So now you've done 4 years in undergrad, a couple of years getting a master's, 3 years getting a law degree. So you've been a student basically for what, 9 years?
10 years. Yep.
And then with all of the geological expertise that you acquired in law school, you hang up your shingle and become a consultant to other people. How did you convince yourself that you had the necessary expertise? And more importantly, how did you convince somebody to write an articled law student a check to go be a geological consultant in the middle of the Yukon? I mean, how did that work?
Well, first of all, I never held myself out as a consultant. I always held myself out as a contract geologist. And I built my first company, Beaty Geological, as a contract geology company. So what we would do is we would dream up a project. We say, let's go to this area and look for gold. And I'd run downtown and I'd sell the project to a big mining company with a big budget. And they'd say, that's a pretty good idea. I'm going to go and back you and see if you can find some gold. And if you do, you'll stake some ground and we'll have a finder's fee arrangement and you can go and do it. Or they might say, I've got a big project I'm running up in northern Canada. We need 10 geologists or 5 geologists for it and a whole bunch of people looking to do sampling and claim staking and so on. And I'd say, well, that's my group. I've got that expertise. Or I had a group that did high risk mountaineering style geology, and a lot of companies needed that kind of expertise. So we'd hire ourselves out for that kind of thing, and it was a ton of fun, and it worked pretty well. And a lot of it had to do with selling ourselves as people who could run a project. And there's a lot of companies in Canada and the United States that do that kind of thing, and a lot of companies that need that kind of work, Rick. So it's not really consulting. It's not really an expertise. It's running camps. It's running field programs, and along the way you do get some expertise in certain things. I happen to have had some pretty good training in my work in New Zealand and my work in Nevada on a certain kind of gold deposit called an epithermal gold deposit. So I knew those pretty well. But we worked everywhere. We worked in platinum and nickel and copper, and anywhere people wanted us to work, we'd go and do it. And it evolved into an international business as well. Working in Africa, working in Bolivia, working in all kinds of crazy places, Morocco, Portugal. So it was a fun company while it lasted. We ended up with, I think, 33 geologists in the company by 1980, 85 or 86. It was good.
One would suggest that you obtained your promotional chops pretty early, which is to say that you had to go downtown and convince people, first of all, that they should care about your geological concepts. And second of all, that these logistical skills that you just described were logistical skills that you possessed. I'm still interested in, how a successful law school student could go and convince Placer Dome or something that they should care about your geological concepts in the Yukon. Was it pure promotional skill? I'm interested in how you got from there to where you are now, and what lessons investors might learn from that career progress.
Well, let's delete the word law or law school from the resume, because I was actually a hopeless lawyer. I would have been an incredibly incompetent lawyer. I just don't have the attention to detail that job requires. But I was a good geologist. I was a very, very good geologist. I was keen. I loved the business. And if you love something, you can be pretty good at it. So that's really what I saw myself as a geologist. I happen to have a law degree. That was rather irrelevant, though. But I did discover, you're right. I mean, I did discover I was a pretty good salesman. And that is a very important ingredient, I think, in running any business when you're selling time. And that's all we were doing at that time. We were just selling time. And I could sell the team's time by selling a project. If I could sell a project, I would have a budget I could spend on my team. We would do the work, get paid the daily rate we charged, and the business would do well. What happened, though, is I morphed into selling projects to some degree, but really selling shares in my very first public company, which, as I recall, you were a seed investor in.
I was. Before we move on to that, because you're anticipating my next question, for resource industry speculators and investors, how important do you think sales skills and promotion are in the CEO? I mean, when we're looking at somebody's experience, either a he or a she, how important are sales and promotional skills in terms of the resume of what you and I might laughingly call the chief ego in the company?
Yeah, I think it's important. I think it's very important. It's all got to do with, I don't know, as I look back on it, just a lot of energy, a lot of enthusiasm, a lot of motivation, getting up early in the morning, going to bed late at night, picking up the phone, not waiting for it to ring. All of those ingredients, I think, are what make a successful entrepreneur. It doesn't mean you're necessarily going to find mines every year, but it means you are going to have the opportunity to find mines. And as usual, as we say, the harder you work, the luckier you get. And I always felt that. So I was constantly selling ideas, selling projects, dreaming up crazy. Some of them were completely crazy ideas. I'm embarrassed now to think of things that I sold as ideas to find gold that were harebrained in the extreme, but I was able to sell them. And when I sold them, sometimes I realized they were harebrained halfway through a budget. And either I went back to the company and said, sorry, this is just a crazy idea. Now I realize it's crazy. Or I would take the budget and go into something that was maybe less crazy, and actually that worked out pretty well once or twice. And investors, when you take, the nice thing about the mining business, the exploration business, is it's so high risk that investors, and these could be companies, these could be mining companies that are investing in projects that I sold them, or it could be individuals who I sold shares of companies that I ran. they're very forgiving. They expect you to fail, Rick. They expect their investment to go to zero because of the high risk in the game. And if they're savvy investors, they know that risk. Well, if you actually find something, they're just deliriously happy beyond expectation because you discovered something. So it was a good business to be in the sense that people always expected you would fail. And if you did, nobody was terribly disappointed.
Well, before you disparage check writers like me who continue on in the expectation of failure, it's probably important for listeners to understand speculative math, which is to say a semi-failed effort maybe costs you 50% of capital. A completely failed effort might cost you 100% of capital, but a success can generate 1,000 or 2,000% return on capital employed. The truth is, the wonderful thing about intellectual capital businesses, which I would suggest exploration is that the quantum of the success is such that it can amortize, in my case, a hell of a lot of failure.
Yeah, and that's a very, very good point. And I think Pierre Lassonde made that point really cogently in a recent Northern Miner article, about the fact that the when you can take one drill hole and find an ore body worth $1 billion, that and give you 100 times a return or 1,000 times return, that offsets a lot of failures. And I used that model again and again. You might remember my first company. We had, I'll bet I drilled 50 or even more deposits, 50 projects, not deposits, 50 projects, and had that much success, zero. But I kept finding a new project. So I had the theory that if I could keep changing the narrative, nobody could declare us worthless. So every time, one project was a dog, it transpired to be a dog, despite what potential it had to be successsul, I'd drum up another idea, another project, go and sell that to people, and always have that opportunity to make that big win. And after years of effort doing this, we finally hit and made a gold discovery, which turned out to be a gold deposit someone else wanted. We sold the company, everybody made out like bandits. So it was a good strategy in the end, but it required us to keep evolving, keep looking for that big win, that optionality value that we have in our industry, and ultimately it was successful.
That experience, and we'll get to Equinox in a minute, but that experience and my early experience with you and some other explorationists is what's always caused me to believe that the exploration business is really a research and development business. It's really an intellectual capital business as opposed to a physical capital business. The process that you describe, what's now called prospect generation in geology, is identical to the process that occurs in Silicon Valley around the development of algorithms, as an example, or in biotechnology around molecules. And I think that one of the problems that many investors and speculators have in the exploration business is that they don't pay enough attention to the intellectual capital side of those companies. And perhaps they spend too much attention to the physical capital side, which is to say, they put all of their eggs in the project basket when somebody that's more experienced might know that it's going to take 50 or 60 failures to get to one success. Would you concur with that assessment of mineral exploration economics?
Yeah, I would, Rick. But I would also overlay it with a strange thing that I have yet to really figure out why it happens, and that is that some individuals are serially successful and many are not. And I can't figure out why that is. It may be that those individuals do roll the dice a lot more than others. They do have more opportunities for discovery. Maybe they have a little bit better innate capacity of looking at good projects that can really offer opportunity for discovery. And it's that innate, maybe it's that magical ingredient that does separate them from others. But for some reason, some people do have serial success, and I count myself as one of those lucky people. And I can't figure out particularly why it is, because a lot of people who are smarter than me have not had that kind of success, and it puzzles me.
The point of these interviews is partially to help the people listening to the interviews segregate among or between the good, the bad, and the ugly. Listeners are invited at this juncture, after the interview, to review something called Pareto's Law, which is the social science dictum that suggests that 20% of a population base generates 80% of the utility in any given task. And what Ross suggests, which is to say that success accrues disproportionately in exploration to a few explorationists, is very, very, very easy to document. The whole concept of the living legends, which goes back 30 years, is to identify and interview, or perhaps interrogate, those few serially successful individuals and find out what it is about them and their process that succeeds. So let's move on to Equinox. We have talked major mining companies and juniors and butchers and bakers and candlestick makers into backing you in various exploration activities. And you started a little company, if my memory serves me correct, it was AUME, looking for mercury-hosted gold deposits, like the McLaughlin deposit in California. That worked with me. I wrote a check. I was interested in it, partially based on your reputation. Tell me how you went from being a contract explorationist to being involved in the circumstances of principle, which is to say, I guess, creating your own client.
It started as a way to keep my contract geologist busy. I dreamed up an idea, went downtown, and I met some guys who said, "Oh, that sounds like a good idea. Why don't you start a new public company?" And I was young, in my late, I guess then it would have been just 30, 31 years old, and it sounded like a pretty good idea. So away I went, and they raised some money, and you were one of the seed investors in that. I didn't have any money at the time, so I bought just some escrow shares at a penny a share for $3,000. I think that was my total investment in the company. And I dreamed up this idea of looking for gold in mercury deposits in northern British Columbia. Well, guess what? We actually took that company public on those properties, and raised the grand total of $145,000 to do exploration work there. And that included $15,000 we had to pay to a broker who did no work at all, and $15,000 we had to pay to lawyers and accountants who did what I felt was unnecessary work. So we only netted about 110,000, 115,000, something like that. And we went and blew that money on looking for gold in these mercury deposits, and didn't find a single, not a speck, not one little speck of gold. It was a complete failure of an idea. But we were public at this point, and I went, "Oh my God, what are we going to do?" And the other thing that happened was, because the broker didn't really raise the money, just put their name on the prospectus, I had to raise all the money myself. And I went to my family, my brothers, my mother. And that was the hardest thing, because every time we had a family dinner, she'd tell me, "Aaron, what about the shares in that company that I bought? What's it called? Equinox?" And when that happens to you, you kind of get serious. And so the other thing I realized is that if you have a success in a public company, you truly have a retirement fund. You can really score big. Whereas when you have a contract geology company, the way I had, it's just a bread and butter business. It's like selling time. And there's no opportunity for that big payoff. So I merged the two companies together. I got more shares in my public company through that, and it was all, basically, instead of having a conflict of interest to two companies, we put them together, and I was really focused just on one story and one big deal. When I realized that the so-called gold mercury idea was crazy, I had already done some work as a contract geologist in West Africa, in Liberia and Sierra Leone, where I knew there was a lot of gold. It was a no-brainer finding gold there. I trotted over to London, raised a whole bunch more money, and bought a drill, hired a driller, and went to Liberia to drill, where we got excellent results. Regrettably, Liberia kind of fell apart into a civil war, and we had to flee, leaving the drill and our driller there, and a whole bunch of near-death experiences that I had in that adventure. Came back, picked myself up, dusted myself off, went into the platinum exploration program, found no platinum anywhere after 3 years of that. Worked in Nevada looking for gold, worked in Nevada looking for lithium, of all things in those days, worked in British Columbia looking for gallium and germanium. We were across the board. Anything that sounded like a good idea, I jumped at. and found some money for it. A lot of it was joint venture money. A lot of it was other companies' money. And lo and behold, out of all that work, we discovered this big gold deposit in Nevada. We also had a gold mine in Nevada, the Buckhorn mine. We acquired another gold mine in California from Lucas Lundin's family, and before you knew it, we were a real company. And ultimately, the gold discovery in Nevada was that which caused Hecla to make a takeover bid for the whole company, and we had a happy ending after 9 years of a lot of bad mistakes. Really, I made some incredibly stupid mistakes in that first company, but at the end of the day, it all worked out.
So I think the lesson here is, first of all, that it is an intellectual capital business, which is to say, if the company had been organized around one project that would sink or fail, the company would have failed probably 160 times. As I recall, when you sold the company to Hecla, you told me in the postmortem that you had shuffled 165 projects through Equinox, working the better part of a decade to become an overnight success. And I guess the second lesson that investors need to take away from this is simply persistence and tenacity. The fact is that you had to come back again and again and again. Your backers had to come back again and again and again. But the truth is, when you ultimately achieve success through exploration, having built out the bones of the company, the quantum of the success was enough that it easily paid back 10 years of rent. And my hope is that the listeners take away from this description, first of all, the fact that exploration is a knowledge business more than a physical business. But secondly, that the team that you back has to have persistence and tenacity. And as a backer, you have to have the same things. Am I missing something there?
No, that's a fair statement, I think, Rick. All I guess I would overlay that with is that there are two things. I did make a lot of mistakes that I don't think I make today in getting from A to B successfully. And I can go through those successes ad nauseum. There were a lot of them. You suffered some of them. But the other was that a lot of the money that I spent was other people's money, other companies' money. So I joint ventured a lot of the risk. I would discover a project, for example, I'd stake it in the name, or I'd acquire it in the name of Equinox. I would then go and find a company, and I'd do a 50-50 deal or a 60-40 deal or whatever deal I could do to have them spend the high-risk money. And so it wouldn't come from my shareholders' money. I was truly trying to treat shareholder money as if it were my own, to protect it, to preserve it. I developed a reputation, you may recall, of being very frugal. And that was because I felt, it wasn't my money; it was my shareholders' money, and I really had to look after it and protect it. And I didn't want to blow it on frivolous things like big dinners and fancy promotion and that kind of stuff. So I wanted it to go on the ground, and I think that's one thing that shareholders really liked, and they knew. The other thing they knew is that if I raised money to do X, I did X. And I didn't shuffle it over to somewhere else, unless it was obvious that doing X was a total waste of money.
Well, as you point out, you didn't waste money. I was, in fact, the author of the phrase, quote, Ross Beaty throws around nickels as though they were manhole covers, which I'm proud of, and you should be proud of too. I think, again, one of the lessons that listeners can take away is that in the exploration business, the real assets of the company is the intellectual capital, and you try and dilute your interest in the project level rather than dilute your interest in the share capital of the prospect generator. I think that's a very important lesson that I've learned again and again and again. Let's move on. You have this wonderful success in Equinox. You've gone from toiling geologist to superstar in a transaction. Admittedly, like everybody else, it took you a decade to be an overnight success. But you're in a different plane now. You can tell people, I've told you so. And I'm going to suggest that now we're entering into the period of contrarianism. The first thing you did, having sold Equinox to Hecla and become a fairly decent-sized Hecla shareholder yourself, as I recall, is you learned about the silver business. And the silver business, I recall, was in the toilet. Hecla was diversifying out of silver into gold, which is why they bought you. You decided to go the other way. Nobody wanted to be in the silver business, and you decided, paradoxically, that you wanted to be in the silver business, probably because nobody else wanted to. So I want to talk about the mindset that went into the creation, first of Pan American Silver, which was, for all of your early backers, myself included, a long ball, grand slam home run. And then the subsequent success in Lumina Copper. I want you to talk about building companies in bad times, paying attention to the contrarian cyclical nature of resources, because you've done a spectacular job in that at least twice.
Well, let me abridge what I could go on at some length about, because they're good stories, I think, and they're good learning stories. They're not particularly unusual, I don't think, but it really was being courageous when everyone else was fearful, as you said already today. Trying to build something at the bottom when no one wanted to hear the word silver or the word copper, and building an asset base that, given our cyclical industry, our cyclical metal prices, you knew the metal price would go up at some point, and those low value assets would be worth much more. It's that simple of a story. So with Pan American, what I benefited from, Rick, was that a lot of investors in the mid 1990s also kind of felt like I did. They felt the silver price would likely go back up, and they were willing to back this young guy who'd had one success with a story of trying to build the world's biggest silver mining company. Normally, if you said that, like today, I mean, I'd laugh. If somebody came from the street and walked in my office saying they were going to build the world's biggest silver mining company, I'd laugh them out of the room. It's so hard to do. But I said that then. And so I had this big vision, big dream. I mean, I had a company worth nothing. It had no money in the company, no properties, a few people, nothing else. But people were willing to back me because I had already made the money on my first deal. And they liked the silver idea. As I was able to promote it, and I learned as much as I could about silver. And of course, the old story is also true. Promoters often don't suffer from a terribly high quality database. The more you know about something, the more you know you don't know. Whereas if you only know a little bit, you can promote really, really well. And I did in those days. I promoted the fact that, we could build a huge silver company, and the demand was going to go up, and the supply was going to go down, and the price was going to go bonkers, and it would be over. It was trading at it was trading at $5 an ounce in 1994 when I started Pan American, and I predicted, of course, to everybody that this price would be over $10 by the end of the decade, and everybody was going to be rich. Well, of course, by the end of the decade, the silver price was $4, not $10. And every single one of our properties was losing money. In fact, we had a mine in Peru that was losing about $500,000 a month by the end of 2021, right at the bottom of the silver price, right at the bottom of the silver price. And I went home and I told my wife, we've only got 3 months of working capital left, and we're going to go bankrupt. And that was going to be the end of the whole Pan American story. But mercifully, we did a financing. Bill Gates was a shareholder. We did a financing with Bill Gates and some of the other shareholders, including me, at the bottom of the market. And the following, almost the following month after we did that financing, silver price started to go up and up and up, and people piled into these junior companies. And that was the last time we saw that price and that problem. And the silver price peaked out, I think, at just under $50 an ounce a few years later. So it was an extraordinary story. But yeah, I mean, I got it all wrong in 1994. But what I did get right was building an asset base that would benefit when the silver price rose, and I was able to hold on to the company despite a whole bunch of adverse events, like a very bad problem we had in Russia, going into Russia, which ended up with basically 4 years of wasted time and no real value. But despite all those misfortunes, we actually ended up building a real company and ultimately became the second largest silver mining company in the world, which position Pan American maintains today. So it's been a big corporate success. On the copper side, it was not that dissimilar, except I wasn't trying to build an operating company with the copper idea. The copper idea was just buy copper properties that looked real, that had no fatal flaws other than that they were uneconomic at the then prevailing copper price. And if the copper price rose, they would probably be economic and would be worth something. And I could probably sell them to some copper mining company for much more than I paid for them. It was just that simple of a calculation. It was a very simple strategy. We went crazy when the price was low. We bought, I think, 10 copper deposits all over North and South America. Total cost, both acquisition, drilling, doing feasibility studies on them, was about $200 million. And we ultimately, ended up spinning them off and selling them for about $2 billion. So that was a pretty successful idea as well. All focused on the copper price being a cyclical, buying low, selling high, getting good projects that all they needed was a higher copper price to be economic. And, it was a pretty simple strategy that worked out well.
I think in a couple senses, you're probably being unnecessarily humble, which isn't something that you're often accused of. But is it fair to say, both with silver and copper, that you saw in both of them commodities that had utility to humankind, where at the then prevailing commodity prices, supply would disappear? In other words, you looked at a commodity price that had to go up. It wasn't that it could go up. It had to go up. Yes, you got the time frame wrong. But the truth is that you were asking a question where the answer began with when, not if. Is that accurate?
Yeah, that's not inaccurate. Sure. I mean, there were a bunch of things that played into that. Knowing not only, Rick, the commodity, but also the public company marketplace. So in 1994, when I started Pan American, there were no real ways for investors to play the equity market if they liked silver. They could buy physical silver, but they were like, Hecla wasn't really a silver company. Coeur d'Alene certainly wasn't a silver company in those years. And Sunshine Mining was, but it was on the way to going bankrupt, which it did a few years later. So those were the only real silver names for public investors. And I thought, well, if I can create a real silver company, people will flock to this new name. And that's exactly what happened. When I convinced investors, large and small, that we were building a real silver company that would be really levered to the price of silver, people came in. So it was not just a market of the silver, but it was also a market for public company appetite, for public company availability of opportunity for silver investors.
Ross, another part of the process that you use to build these companies that I want investors to understand is the fact that you came to understand that scale was very important, that larger companies had more investment opportunities, had larger market caps, had larger liquidities, they had lower costs of capital. There was a virtuous circle in scale. And I think that you intrinsically understood that. It takes a long time to build scale, of course, but you did two things. You did build scale at a point in time when the sector was out of favor, establishing your franchise around silver, around copper, lowering your cost of capital, growing the business, and importantly in both companies, continually upgrading the asset base. That is to say, you might have started the company with tier 3 assets. When you could afford tier 2 assets, you bought them and sold the tier 3 assets. So perhaps you could talk about the process of building companies, building scale, building franchises, building liquidity, lowering your cost of capital.
You may remember, Rick, that Equinox, my very first company, had a gold deposit near Bakersfield, California called Zenda.
I do.
Zenda, I spent 3 long years in the late 80s trying to permit that deposit into production, which we finally did after battling with the California Water Board and other bureaucrats. Zenda had a total gold resource of 50,000 ounces. And our clever plan was to build a 15,000 ounce a year gold mine and run it for 3 years and then find another small deposit and mine that. I mean, it was a crazy idea. We wasted 3 years of our time. So that did teach me more than anything else, I think, the value of scale, the value of going big. Big projects have big returns. Little projects have all the hassle of big projects, but no returns. So you want to focus on the big ones. So especially projects that can span commodity cycles, where you can have a deposit that can be mined for 20 or 30 years. And you're going to make money in that because you're going to catch an up cycle at least once, maybe twice. and that'll offset all the problems you suffer during a low price cycle. So scale is super important, and I would argue actually it's even more important today than it's ever been. Scale is important for a whole variety of reasons. And the other thing that I think is important is diversification, is to build a diversified asset base. If you're trying to build a big operating company, you want to have diversification, because this business is so risky that at any point in time, a single project can fail or have big problems for any variety of reasons, none of which have to do with its intrinsic sort of geology or its mining potential. It's the social risk, environmental risk, the political risk, the risk, all sorts of risks that exist in the business. So to offset those risks, you diversify your portfolio. If you're building an operating company, if it's a simple one property speculation, that's a whole different story. You've got to sink or swim on the strength of that one property and live with all that other risk that's there. But the overriding message, I think, is that scale really does matter. Big projects make big returns, are of interest to big companies. Small projects are not.
So, Ross, we spent 45 minutes now in a biblical sense teaching our audience how to fish. As you know, that's not what they're interested in. They want you and I to catch the fish, clean the fish, serve the fish up with garnish. So let's talk your book now. Let's talk about what you're doing today. Let's talk about companies that you are invested in, or companies that you are helping operate. What you see as being attractive with your own money.
Well, Rick, I'm in the sunset of my life, and thus the sunset of my investing world. I'm not really investing too much in new projects, but I have certainly for many, many decades. And my career has been both as an entrepreneur building companies. I think I've started 15 different public companies, but I've also been a significant investor in others. So I've kind of looked at both things. And you have to look at an opportunity very differently, whether you're an owner-operator, as it were, or an investor who can come in and go out whenever you want. It's a very different kind of world. My book right now is partly companies that I founded. Pan American is one. I've retired from that, but of course it's still a fantastic company. I'm chair emeritus of Pan American. As a silver speculation, I don't think you can do worse than look at Pan American. And I spent 10 years of my life, Rick. We didn't get to this, but from 2008 to 2018 or 17, I started up and built a renewable energy company called originally Magma, then it became Altera, and now it is Innergex. Innergex acquired Altera in 2017, and Innergex is now a very, very large world-class hydro, wind, and solar power company, which I'm one of the largest shareholders of and on the board of. So that's still a company that I'm very interested in. Clean energy is a great business today, and it's going to be a great business for decades to come. So Innergex is my way to play that whole game, and I'm still actively involved in Innergex and very proud of what they're doing. Back to mining, my biggest thing right now is the company I started in the beginning of 2018 with a couple of other people in Vancouver, called Equinox Gold. It's my last company. I won't be starting any new companies, and Equinox is my swan song, but it's also one that I'm very focused on building a world-class, large gold producer. So in the last 4 years, we've built or acquired 7 operating gold mines. We have a very large new project in Ontario that will come on stream at the end of next year. Ultimately, the company will be producing more than 1 million ounces of gold a year at reasonable cash costs, significantly below the current cash costs in the company. And it's on a mission to become, like I said, one of the top 10 gold producers in the world. And I'm very proud of what we're doing there. Very, very exposed to gold, of course. You have to believe in gold to buy the company. But if you do, there's few better opportunities for the price of the shares today than Equinox Gold. It's a great opportunity, great business, and I'm very, very proud of what we've built in a very short period. And then I've got a couple small companies, real single asset deals. One's called Lumina Gold in Ecuador, a big gold deposit there also gold. And it's kind of sister company, Luminex Resources, which spun out of Lumina Gold a couple of years ago. Luminex is both copper and gold. and also Ecuador, and they're both junior companies, very beaten up right now, like most of the sector is. But those are ones that I expect. I'm very hopeful that we'll have a happy ending with Lumina Gold in the next year or so, and Luminex just to the same degree. They're both companies that will be bought by major companies in due course. So that's really what I'm doing on the kind of owner operator side, or startups founder side, more directly. And as an investor, Rick, as I said, I'm not investing in too many things right now, but I have plenty of good investments that I'm holding, assets, companies involved in Namibian gold exploration, Latin American gold exploration. I like gold a lot, as you can tell. I'm not a big investor in lithium or uranium these days, but I know in some respects they've worked out fairly well. And I'm kind of exiting the business world in favor of more philanthropy, giving money away instead of making it. That's really my world right now. I'm spending more time on philanthropy than I am on mining, quite frankly.
Well, let's go there, Ross. You've become known as an extractive industry entrepreneur. The public perception of extractive industries and extractive industry entrepreneurs is not sterling with regards to their environmental track record. And yet your most important philanthropies, and I've known you for a very long time, are all environmental. Perhaps you could talk a little bit about reconciling your extractive history and your extractive practice with the values around nature and the environment that are so important to you, how the two relate, and what you're doing in that realm.
Sure. Well, for me, it's pretty easy. I mean, mining is a required practice of an industrial society. We need metals, and anybody who throws bricks at mining companies should look at themselves in the mirror every time they use electricity or drive around in their car, or do anything for that matter, because everything that can't be grown has to be mined. So it's an industry you have to do. The trick is how you do it. There are good mining companies that have extremely good practices that don't create any pollution, that reclaim very well. And there are bad companies, and you have to really discriminate between the two. And there is a good way to mine, and there is a bad way. And you should always focus on doing it as well as you can, minimizing pollution, minimizing impact, minimizing land use, minimizing effect on not just the environment, but also communities and workers. That's the right way to operate. Reclaim very well. Most good mines, when they're reclaimed, most people don't even know they exist, except perhaps in the case of a big open pit, a hole in the ground. They don't even know they exist. I can take you by mines that we've reclaimed that most people wouldn't even know there was a mine there. Big heap leach gold mines, for example. So there's a right way to do it and a wrong way, and you have to do it the right way. But you also can't be too much of a hypocrite on criticizing mining, I think, where you don't criticize, indigenous mining, artisanal mining, small scale mining in places where real impact is happening, and yet nobody's complaining about it. In a lot of Latin American jungle regions, for example. So because I've always been interested in nature and always wanted to protect nature as much as possible. Obviously, that's where I focus my philanthropic dollars. And it's we all focus on certain things. We all have certain things that we're drawn to, and I'm drawn to trying to make our natural world as to protect it as much as possible, as long as I can do so. So I have a big foundation, and that's, we're supporting a whole bunch of different groups that are trying to do that. And it's not incompatible with mining at all. Mining is far less destructive as a land use, far, far, far less destructive than cities, villages, shopping malls, roads, railways, and all these things that people use and never complain about. I mean, a good subdivision, which is a permanent use of land, a permanent 100% destructive use of that land, is far more impactful than almost any average gold mine or copper mine in the world. But people don't make that connection. They choose targets that are kind of easy targets, and they don't look at their own backyard. And that's just the world we live in. That's the nature of people. But I can quite happily say I'm a miner on one hand and an environmentalist on the other hand. As long as we live in an industrial society, we have to mine, and we have to mine well. And that's the trick of every single company executive, to mine well, to do it without polluting, without bothering communities without having harmful impacts to as great a degree as possible. There is no such thing as clean mining. There's no such thing as clean energy or any non-impactful human activity. They're all impactful. We just have to minimize that impact to the extent we can.
Ross, I want to thank you for joining us today. I think the lessons that investors take home from this probably is passion, probably is persistence, probably is thought, probably is duration. And I want to thank you for being the vehicle, I guess, to bring these attributes that have allowed you to build so many successful companies. And I want to thank you for helping to educate this audience around how success is created in our industry. I want to thank you, too, for 40 years of friendship and many, many, many more successes than failures in an industry that generally lends itself to more failures than success. I want to remind the listeners, too, that this is part of an ongoing series of interviews around living legends that can be accessed through Real Vision and in parallel through ruleinvestmentmedia.com. Ladies and gentlemen, Real Vision and especially Ross Beaty, thank you for today's session.
Thank you very much, Rick. It's always fun to do these little trips down memory lane, especially with a friend like you who's been with me in every single one of my companies. Thank you very much for the opportunity today.
Pleasure. Thank you.
Hey there, revolutionaries. To join a community sharing professional insights like what you just watched, head over to realvision.com and get unbiased insights and exclusive access to the very best, brightest, and biggest names in finance. Join our community of lifelong learners.